All right. Good morning. For action. Okay, let's do it. Well, hold on a sec. I gotta mute this. Okay. All right. So markets down. Trade war concerns again. And so now, how bad is it? Good morning. Our first reference point of support is the prior day's low. And so here's the prior day's low. We look at where our price is trading when they gap down. And we see that they are right about there. So a gap down under a prior day's low after a multiple bar move up is bearish. And it suggests prices are going to go lower. Now, they're in an uptrend. As we look at the Qs, they're in an uptrend. And the next reference point of support is down here. And they pretty much move straight up, which means there's a void right there. So we'll see if this can break down below that low. And you see it doesn't really look like the prior day's low on a 24-hour chart. It looks like minor support. But we're looking at a 24-hour chart. That's the grayed area there. And it does give you a different perspective. So in any event, we look up, here's where it's trading right now. And it's pretty darn close to the prior day's low. And it could hold, right? We'll see if it turns back up again. You know, we've seen a lot of red bars being ignored here, like right here. Red bar being ignored, 180 reversal back up again. And prices have held its support. So does it happen today? One of the things that we always do is go and look at other markets and see, are the markets weaker? Do they suggest something else? Are they in alignment? And I go to the spiders. And so here we have a couple of days low, 277-ish right here. Whoa. That's gap down under that low. And it kept going. And it's down at this next support point, which is based on overnight information. And so these lines are in the same place on the daily chart and the 60-minute, 24-hour chart. But when we look at the daily chart, it's in the middle of nowhere. And as far as support goes, and that's a pretty big gap down. That it's down here, 276.22-ish down here. That's a nice size gap. Well under multiple bars, not just yesterday's or the day before yesterday. It's taken out the low of several bars. So now, does it hold this intraday point? Well, it's already starting to hold that intraday point. How can it hold and move it back up again? I would say no. That would be incredible, because think about what that would look like. Gapping down here and turning this into a big green bar. Hard to imagine that kind of day ending that way, because I can't remember seeing such a thing where prices gap down under 4 days of trading and turn into a wide range bar to the upside. But my memory goes back a lot of years. It could have happened, of course. It would be a big surprise to me. But so it's a big gap down. And we look to the next levels, of course, as to where they are. And that is actually during the trading day, that 274.14, which is that bottoming tail right there on the daily chart. That would be a pretty big move to the downside in one day. So hard to imagine it going down there, but we'll see, especially with the Qs being, where they are and not such a bearish gap down. And now I'm going to go to what's been the strongest, and that's the Russell. And how bad is that? Well, it's a pretty good gap down, but it's not under the prior day's low. So that's holding up okay. But 1, 2, 3 days trying to go higher, a bottoming tail bar, which would have suggested a move above this high. But now we've got this news of this trade war, taxes. Like, how long did they talk about it like it wasn't coming? So now it's here. Here's the news. The market's bearish, but this news is coming out after going up, up, up. So say, okay, the news is now what's going to cause this correction. And I've been telling you for a couple of days already this week, option traders have been betting that this market's going to go higher. And historically, it doesn't happen when they're at an extreme in their views. So now we look at that market internal as a guide. We don't know necessarily what's going to trigger some type of corrective action, and corrections can be sideways corrections. They don't have to be down, but based on the spiders, the correction has started to the downside now. So what we'll do over time is to continue to monitor the wrong way option traders in their beliefs about the market. And as the market corrects for a while, when they start betting that it's going to go down, that'll tell us that it's probably going to go up. Today is triple witching. Oh, thank you. And volume, I guess the volume should be high. I mean, these triple and quadruple witching option, expiration days, I don't know how many years it's been, but I mean, many years ago, they used to be wild kind of days. And they're not as wild as they used to be. We'll see what today brings, but it's certainly something to consider as far as, when you look at options, strikes, and open interest. When you look at the open interest and where it's really big, whatever those strikes are, there's a tendency to hold prices around those levels. So it's something that we'll have to take a look at. Now, I will take a look at that as it relates to the spiders and Qs, because that could give us a heads up as to the probability of where prices might just hold in those areas. All right. Transports. I didn't make my lines here, but you can see where we're at: 270, 299, 298, almost 299. And so not a big deal, not a big deal. So this is holding up relatively well. Odds are transports are not going higher, with the broader markets going lower. So it would be great to see these hold up and show some relative strength, right? They were showing relative weakness while the markets were going up. So for them to show some relative strength, what would that tell us? Well, if that is what happens and we go and by next week they're holding up, it would tell me that the correction, however, to what extent it's going to be, probably won't be too bad. If this can show strength here. Reading Pat's comment, if they're going to dump the market, and they're dumping it right now, right? If you look at the S&Ps, it often happens on the week after Ligerberg, I don't know what that is, concludes. That's this week, so it will be interesting. Yeah. All right. Well, we always have to see the extent of how far prices correct, and we look at where support is, where resistance is, and then the patterns, and we'll look at multiple time frames. We'll look at our internals to see when they start to point to a reversal. That's what we do. I've done it for, probably going on 3 decades, something like that, and it works. A big global leader meeting. Okay, nice place. So this doesn't, look so bad, but here's the futures. You get a different perspective because it's a 24-hour chart. But right now it's a big red bar, and it's holding at that level, which you can put right there, and you can see. holding on that little prior low there, but a big wide range bar down, and it held there right earlier, a few hours ago, and it bounced, and it couldn't even bounce up to this resistance area. So as we look at wide range bars, right, you know the rule. Wide range bars create voids. They do show power, and they suggest a continuation in that direction. When prices bounce, if they stay in the lower half of the wide range bar, right, well, we say that wide range bar is the power of it hasn't been compromised. And now we can see that the futures are actually starting to tickle their way lower here. But just be aware, a lot of times futures markets, when they're in downtrends and they start to push lower at the open after they've been going down like this, they have a tendency to pop back up first and just, whipsaw those getting in at the open. Okay, there you go. Man is telling us that 2775 SPX is where there is big option buying. So let's take a look at that. And so $27.75. Give or take, right? Which is right there. Interesting. So it's on an area of support. And you see this is where it bounced up from the other day when it came down to it. And we've got this sideways consolidation there. And I don't even know if this is really updating the way it looks compared to the other charts. Go back to the spiders. 2782. 27. I don't think that's updating. Yeah. So it looks like we're in there, but it may pop back up into that area and hold around there. We'll see. That it's good information as an intraday trader to be aware of that. And we'll see if it starts to gravitate around that area and hold there. Right? So let's look at the NASDAQ futures. They don't look so pretty, but they got a ways down. They had a good day yesterday, so that prior low is a little ways off. And again, that's a 24-hour chart, and you can see the momentum move, and there's no support here because it's a wide range bar, and that looks like it's going to continue to head lower. The Dow is moving down, pretty decent sized bar here. Is there any support? Nope, nothing there. If we get down into this area here, and we can put it on that chart and see where it's at, where these opens and closes overlap each other. Rising 20 MA. And so we've got a moving average reference point and an actual support reference point, which isn't that big. So we don't need any fib lines to kind of eyeball this to see it's getting a little deep. We'll see how far it goes. And bonds, we had that bottoming tail a couple of days ago, some money shifting into bonds. Oil, reversal here. I mentioned XOP yesterday, looked a little bearish, was getting there, so maybe that is going to be worth a short, where, it's not a broken down trend, but maybe, this will be worth a call spread or something in that particular sector. We'll take a look at that. And gold looked like it. Remember, we looked at this yesterday. We've been, staying away from this sector. And Dan's saying there's no juice in XOP. Oh, maybe we'll just have to short it. Nasty drop in gold here. Right? We've been saying it's in a downtrend. Whatever this stabilization is, who cares? It's a mess. Overlapping bars. If it can inch its way higher, it's just not a quality type of setup. And now it's just being bombed to the downside here. some stocks, which Dan will look at. The majority of this IQ was up on the day, monster day yesterday, coming in, right? And look at this crazy move, right? $5 to $10. By the way, if anybody left early, we had a pretty nice section at the end of the day, and actually after the close, looking at a lot of low price stocks. So we built a very nice interest list of those low price stocks, which we'll share when things calm down. So it's getting a little late here. Let me let Dan take a look at the gappers and open positions and such. So go ahead, Dan.
Hey, good morning, sound check, everyone. I'm joining you from Dallas, Texas for Father's Day weekend. And that's the beauty of what we do. I take my Dell laptop anywhere in the world. So sound is good. I got my new headset here. All right, cool. Hey, all right, 10 minutes ago, so let's go a little bit fast. Here are all our opens right here, from here to IBB. But we actually are, well, let's go one by one. Everything's red, the ITA. We have a bear call spread. I sent out a telegram alert saying, let's go ahead and cover half over a 5-minute high and then trail. So that's, a nice winning, of course. Nice find by Greg the other day. We have a way out of the money Apple put spread. We covered half at 75% profit. I have the stop in place. If that's, and then it expires today. So if it stops out, it's still going to be at a huge profit. Nothing to just let it play out. CSX covered call with a tightened stop. And we have a wonderful cost basis in that through 3 successive rounds of covered call writing. Whoa, look at GGAL. Just saw that going by the ticker. We'll come back to GGAL. All right, here we have a put spread. I think we covered half. Zulu Sierra's fine, 34 cents. STX, we have a Condor. I was getting nervous on the high side yesterday, but just sat through it, did nothing. So now we have lower lows, lower highs on the 15-minute. Our RCL, disaster yesterday. We legged into an iron condor to increase the potential maximum gain. Costco, we have a put spread, that's fine. It's way out of the money. XPO, we have a put spread. We've covered half already. We trailed half under a prior bar's low. See, this was one of my managements where I didn't know how far up it was going to go. So what I do is say half lot stop out under one of 2 scenarios. Number 1, I gave you a limit. It did not hit. But number 2, I said under a prior day's low, take half. So that was 100% perfect management. We have a put spread here that expires today. We covered half in the momentum yesterday at a very nice 15 cents, and we were trying to squeeze out the back half. But we're still fine. Let me just check the strikes on that. We got the 260s. So we still have $4 of cushion. OLED here, I just saw that one going by the ticker. See, I can talk and look around at my TV every now and then. So NVIDIA, even this will be interesting if you wanted to compare what it closed at, and then even with a $4 down, it's a melting ice cube that expires today at 4 p.m. I would be real interested to see what those put spreads open up. Well, 5 minutes, because the open's a wild, wild west with the wide spreads. But that one's fine. UAL, market getting whacked, and this is only down 17 cents. If that's true, if there's light volume, then that's actually showing great relative strength. There's our ITA we talked about. Pulte, we're still, we got naked short puts, 29 here in the advisory letter. That's fine. H, I can't tell where it's opening. We have a covered call. It's been, you know, touch and go here, but I don't like the retracement and the supply, you know, 2 areas of congestion. We have our stop in place. We're just going to let it play out. Disney, we covered half. Holding fairly well. Let me get rid of this email. Making noise. If you would compare this pre-market consolidation to anything else, you know, everything else gapped down and continued to sell off. Dan, you know, I remember talking to you about that, and you know, I said I moved it. You know, Greg and I both were talking, and I'm tighter than he is. So we actually, for the rooms, well, for the advisory letter rather, we stopped out of the July put spread break even, but feel free, you know, keep asking me about it. We'll monitor it with you as we do any positions you're interested in. IBB, we have a put spread in the weekly that expires today, but just like Apple and NVIDIA and all the other ones, it's 108.50. So if this is trading at 110.49 right now, we have another $2 of cushion. So we're totally fine. I just saw Bud going by the ticker. So we have, you know, these gap downs on most of these plays because of their put spreads. We're not getting hurt at all, particularly the ones that are expiring today. That's the old time value. All right, 4 minutes to go. Let's look at some gappers. This looks like a new IPO, whatever the heck this is. Let me write it down. I might add this. HJLI. I'll look them up later. Don't want to take time to see if there's any that I'm going to add to my dance list. GGAL 41. That's up. Okay, so that's what we call a bull gap surprise. If it's, you know, true, that could possibly be a 30-minute high day trade because of this fluid move. It has a price void above. It would only be a day trade to me because that's an ugly engulfing weekly. OLED gap breakdown 95.70. That looks like maybe a tier 1 trade. We'll keep an eye on that. Budweiser, I just saw coming by the ticker. Relative strength 99. And that's a gap breakout, and it's oversold on the weekly. So let's keep an eye on that for a put spread. It's very, yeah, remember Budweiser got bought by this foreign company. So now it's an ADR. I forget who bought them. Oh, InBev. Wait, but if InBev bought them, why the heck is Bush's name in front of InBev? Because Budweiser was not a foreign company. You know, that's as American as apple pie. Budweiser, Miller Lite. All right, I have a few more gappers up here. And then I had a bunch that we're watching from yesterday that I put in here. MCF, relative strength, you know, just breaking out. We'll watch it. Fincer had earnings. It had a gap down and is recovering, but you know, no great pattern, but we'll come back in 30 minutes. Adobe gap down. The old goose. Is this the Gray Goose liquor company? 59. Whoa. This might be another gap and crap out of the money bear call spread candidate. Wow. Look at that gap. But we've seen many gaps that that doesn't mean they're going to stall. I mean, remember FIVE, Restoration Hardware, Tiffany, I can go on and on. Jabil had earnings and it's a pre-market mess. This one, CLPS, I'm going to add to my dance card, recent IPO, rounding bottom here, wide range bar. It's gapping up again, unfortunately, making it untradeable. But anywhere in this area on the daily would have been a fantastic entry, but the gap's messing us up. GNK gapping down 1680, way down here. I don't see much to do there. TCX, look at this beautiful relative strength. Oh, I think that's, I don't know where I got this. Maybe, oh, yeah, I got this yesterday when we were scanning together because now I'm into just the general watches. Okay, these are just leftover from yesterday. Splunk, look, now that's a breakout failure. Ooh, but nothing to do with it. So I'm just going to start trimming. TWO we had as a breakout over the high. So let me go ahead and just set an alarm at yesterday's high, 1592. All right, let me go back to opens to see if there's any problem children. And I'm just working off the one laptop today. So, Greg, I'm not going to be watching the, the overall market as closely as usual. I'll just have to keep coming back. And so here, see, all I'm doing, folks, is I'm looking at my open and close gain here to see where the problem children are. I know that Apple down $1 is fine. 29 is fine. STX, we have a Condor, fine. RCL, fine. Cost is now green. XPO, fine. Put spread, NVIDIA, we have the 240s, remember? So that's fine. Look, everything's fine. Even with this nasty gap, we have no problem children. Let's come back. All right, they're showing RL on CNBC. I have the volume off though. I'm just looking at, nothing there. Even though it might be a day trade short right there. Look at this relative strength still on Lulu. John, okay. Well, yeah, John, no, there's going to be some, I'm just talking about, pain means a disaster like that RCL yesterday. But I'm saying in terms of management, I just went through here one by one, and there's nothing different to manage. But I mean, ask me anything you want. Okay, you're in Boeing. And yeah, I mean, that would be definite pain if you didn't take your stop. Here was our entry day, right? And then we took half profits, and then it was either on this day or this day, I forget which, I moved the stop under that pivot, particularly with the, the broader markets being in question of overbought. So I used tighter stops because of the broader market and the internals. So yeah, you were out that day. Oh, shoot. Okay, all right, we can, all right, shoot. So what do you do now? It's an engulfing on the weekly, topping tail, the sector gapping down, rolling over from this square top. Here's your support right here. So momentum is still down on the 15. That's one of these that there's no great answer. Do you just, roll it to next week to get more? Because he is juicy. All right, we can come back to that spiders. That bearish gap looks lower to come deeper into this minor support area. But, wow, look at that. This is still pre-market. See my dotted lines? So into the market open, that's a bullish wide range bar. So I have no idea what's going to happen right now. If this turns into a bullish 1, 2, 3 on the 15-minute chart, then the bulls, we're buying this gap down. Let's look at the others. Well, yeah, correct. You will absolutely, you'll be assigned. So you do need to act. All right, diamonds weaker here as they have been the last couple of days. came crashing through their minor support. They had less of a rally. You know, now we're getting a little deeper into that pre-market wide range bar. You look at support areas. I got to go to my 60. Look at that. That, you know, I would say this could easily come down to this 248.50, another dollar and change for this gap area would be a logical next pit stop. Spiders, you know, this minor support breakout, 270, you know, another dollar. Q's holding the strongest. Still, believe it or not, that's still an uptrend, isn't it? Yes or no? On the hourly chart, higher highs, higher lows, but you know, it's wide range bar from a square top. We just have to see if this higher low is going to hold. IWM, it's in a sideways range, right? Look at all these tops here at my sister's house. And my dog, my sister's dog is saying good morning. No, that one's Millie. I actually bought this dog for her. We were at a, all right, let me shut that dog up. And if I have to mute this momentarily and, okay, let's come back. So this is sideways, but now it's breaking the day's low. Next target here, you know, might be this area, but then there's going to be a lot of football players on top. Let me change it back to 15. All right. All right, I'm looking at my opens again. Look at our here relative strength. Look at that. Anything green. Look at our Costco. Anything green today? Look at Costco. Gap down. Wide range bar, and it's now breaking out to all-time highs. That is amazing. Look, our NVIDIA. I'm gonna now, just out of curiosity, see what our put spread is here because of what I told you pre-market. Expires today, 260. The 260s, 15 by 18. So see, I told you that we're in a guaranteed winning situation. The 260, it's 7 cents a share to close. So here, I'm just gonna tell them to stop the day's low in case things get really ugly. Let me just send that text alert real quick. All right, that's done. That's why I love Telegram. UAL, okay, it was down 18 cents pre-market, but look, it's still holding. It's fine. So even though, John, I would be down, and my gun realize, well, down or neutral in terms of open P&L, but down a little bit relative to yesterday, there's nothing to do. It's fine. We're just in management mode. All right, ITA, let's see. 5-minute chart, I said 5-minute high, and it still hasn't taken out the 5-minute high in terms of management, but let's see what the midpoint is right now, 205, 210.